Welcome back to the Analytical Edge. I'm your host, Alex, and today we're cutting through the noise and focusing on the difference between gambling and discipline in the financial markets. For many retail traders, hitting buy or sell feels like a shot in the dark, a pure gamble. But our guest today argues that trading is a specialized discipline that demands world-class diagnostic tools. Joining me to talk about turning market uncertainty into clear vision is financial markets expert Jordan Miller. Jordan, welcome.
Thanks, Alex. It's great to be here. And you nailed it. That feeling of uncertainty, that pang of fear, it's incredibly common. But if you strip away the fear, what you find is often a reliance on outdated tools, or worse, relying on a headline or a simple hunch. We're here to talk about moving past that novice stage.
Exactly. And your core premise is that the broker is more than just an execution channel. It's your analytical laboratory. That really resonated with me. Can you elaborate on why choosing a broker platform based solely on low commissions is such a rookie mistake?
It's a classic mistake, right? It's like buying the cheapest car available without checking if it has ABS or traction control. Low commissions are nice, but if the platform you're using is giving you blurry, slow, or incomplete data, you are fundamentally sabotaging your decision-making. We need to shift the mindset. The platform is where you dissect price action, interpret patterns, and project movements. If those tools are deficient, your analysis, the very foundation of your trade, is compromised.
So, the true measure of a professional platform is the quality, depth, and speed of its technical analysis tools. Let's start with the core discipline itself. What exactly is technical analysis, and why is it the backbone of a viable trading strategy?
At its heart, technical analysis, or TA, is the study of historical market behavior to predict future movements. It operates on one powerful premise: the price discounts everything. It's not fortune-telling, it's recognizing collective human behavior patterns reflected in the charts. If fundamental analysis is about the what, the intrinsic value, TA is about the when and the how. It tells you the ideal moment to step in or step out.
I love your analogy of the market being a two-way time machine. How do the different categories of TA tools help us read that map the market is drawing?
Think of it like being an archaeologist. You're using tools to reconstruct the past to understand the architecture of the future. We rely on three main categories. First, trend indicators, like moving averages, which tell us if the market is in a high or low tide. Are we generally moving up or down? Second, momentum indicators or oscillators like RSI or MACD. These are critical. They tell us if that tide is gaining or losing force. Is the trend exhausted or just getting started? And finally, charting tools like Fibonacci retracements and support and resistance levels. These trace the invisible boundaries of the trading battleground. You need all three views for a complete picture.
That makes sense. Now, let's talk about the features that separate the elite platforms from the basic ones. You emphasize three criteria: depth and customization, execution speed, and security and regulation. Let's dive into customization first.
Customization is the true test of expertise. A quality broker needs a library of not just 10, but maybe 100 or 200 pre-installed indicators. But the real edge is programmability. Can you, as a trader, create your own custom indicators, scripts, or even automated trading robots? Platforms like thinkorswim with their ThinkScript or MetaTrader with MQL allow users to refine a strategy to the millimeter and, crucially, backtest it on historical data.
Right. That ability to backtest your own bespoke strategy is what moves you from reacting to the market to having a validated, evidence-based plan.
Exactly. It's the difference between wearing a standard suit off the rack and one custom-made by an expert tailor. The perfect fit allows you to move without restriction. Another key element here is true volume data. Many low-quality brokers give you synthetic volume. The best platforms provide real exchange volume, especially for futures and stocks, which gives you far better insight into institutional activity.
Let's move to execution speed. You mentioned slippage, that phenomenon where your order executes at a price different from what you expected. How critical is speed to technical analysis?
Speed is everything. Your advanced indicator might flash a perfect signal on a 5-minute chart, but if there's high latency, a delay, between that signal and your order hitting the market, your advantage is wiped out. It's like firing a bow and arrow. The aim can be perfect, but if the string is slow, you miss the target. The best brokers invest heavily in dedicated servers and optimized order routing to guarantee speed and minimize that slippage. Trust is built not just on regulation, but on a guarantee that the technology performs when it matters most.
And that brings us to the non-negotiable point, security and regulation. We can't analyze charts if we don't trust the foundation.
Absolutely non-negotiable. A great charting software provided by an unregulated company is a risk never worth taking. You need a broker regulated by top-tier global entities. Think FINRA, the SEC, the FCA, or ASIC. This isn't just about whether the tools work. It's about knowing your trading capital is segregated, secure, and the company operates under a strict legal framework. Maximize regulatory transparency first.
Let's transition to the heavy hitters. Based on the pillars of experience, expertise, authority, and trustworthiness, which platforms stand out for technical analysis?
We have a handful of titans. I'll highlight 3 that represent different needs. First, Interactive Brokers with their Trader Workstation, or TWS. It's not the prettiest, but it is the definition of professional grade. It gives you level 2 market data, full depth for stocks and futures, and tools like their Risk Navigator integrated directly into the charting platform. It's the choice for professional fund managers. Second, the platform I think is the most balanced for power and usability. Thinkorswim, now under Sheryl Schwab. Their ThinkScript language and massive community for custom indicators are legendary. Plus, their on-demand feature, allowing you to rewind the market to any historical date to practice, is simply unrivaled for building expertise. And third, we have TradingView. It's an independent charting platform, but its integration with over 50 brokers makes it a de facto standard. Its PineScript is easy to learn, and the global social trading community adds a layer of collective expertise you can't ignore.
That's a great breakdown of choices based on what the trader prioritizes. TWS for the institutional approach, Thinkorswim for customized power, and TradingView for community and ease of use.